Hello, I'm John Cunningham, and welcome to the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Now, today's show features interviews with executives of 3 public companies. First, Medalist Diversified REIT, ticker symbol MDRR on the NASDAQ. Medalist is a Virginia-based real estate investment trust targeting value-add opportunities in the southeastern U.S. Management has operated 2 prior private funds with great dividend track records and has paid 3 quarterly dividends of 17.5 cents each since going public in November of 2018. We'll learn more in an interview with the CEO later in the show. Our second company featured today is CTD Holdings, stock symbol CTDH on the OTCQB. This is a clinical stage biotech targeting unmet medical needs. It has been administering its Alzheimer's treatment to a patient for more than a year under an FDA compassionate use program with positive results to date. It is also in clinical trials for a rare fatal genetic disease called Niemann-Pick disease type C. Later, you'll learn more about these programs and more directly from the CEO. Now, the final company featured today will be Piedmont Lithium. Their stock symbol is PLL on the NASDAQ. Piedmont is developing a world-class domestic lithium project, which is outside of Charlotte, North Carolina. Now, this is an area that historically provided most of the Western world's lithium between the 1950s and the 1980s. Demand for lithium is expected to soar as the electrical vehicle market expands in coming years. Later, you'll learn more about why Piedmont is positioned to win big in this exciting market. Now, before we get to our first interview, our quote of the week, it comes from the book Small Stocks, Big Money. If you want to invest in the microcap space, buy companies, not stocks. You buy stocks, the daily fluctuations and the lack of liquidity will drive you crazy. Again, this comes from the book Small Stocks, Big Money, a book of exclusive interviews with some of the biggest players in the microcap space. Order your copy today at redchip.com or on Amazon. Now let's get to our first company interview today with Medalist Diversified REIT. Their ticker symbol is MDRR on the NASDAQ.
Tim, thanks for being with us today.
Glad to be here.
Now, your team has an impressive track record with your first 2 funds paying out yields of 8% and 7.5% respectively. Talk to us more about this performance and what you expect with Medalist moving forward.
Well, before we do that, I want to say that the first fund where we're paying out 8%, we've liquidated that fund. A lot of the investors in that fund and other properties that we've owned in the past are now investors in the REIT. So we have many legacy investors. So far, the public REIT, Medalist Diversified REIT, has raised approximately $35 million. We have $53 million in assets under management currently. We hope that in the near future will be around $100 million by the end of the year. We have 3 properties that have been filed with the SEC that we'd like to purchase in the next 40 days. We also hope to do another round of equity raising between now and the end of the year to add to that. So we expect to be $100 million by the end of the year. Our long-term goal is to be $300 to $500 million in assets under management in the next 3 to 5 years.
And I'll note a report by Aegis came out recently with a buy rating, target price of $550. Looking at the big picture, what is the essential value proposition for investors today? Why should they take an interest in Medalist?
Medalist invests in what we like to call workforce necessity real estate. We try to be as Amazon-light as we can on the retail by buying neighborhood shopping centers. We buy multifamily housing. We purchase industrial flex property, select and limited service hotels. By having this diversity, we feel like we are a little bit of a defensive strategy. Also, in our market area, yields are much higher than they are in a primary market area. We're buying properties in the secondary and tertiary markets where cap rates are 7 to 9%, which allow us on a leverage basis to create a high rate of cash flow.
Now, I want to talk a little bit about the management team because you do have a stellar track record.
Yeah, so the management team is comprised of me and my partner, Bill Elliott. We started the company in 2003 as a private equity company, graduating to a public company last year. My background is in capital markets. on the institutional fixed income side for what is now Bank of America and for what is now Wells Fargo. The last few years of my career in capital markets, I focused on commercial mortgage-backed securities, which allowed me to transition into this business pretty easily. My partner's background is in commercial real estate. He spent over 33 years in the commercial real estate space. Past president of a large regional commercial real estate firm in Richmond, and has lived through several recessions, which is why we have the type of investment philosophy we have today.
You're targeting markets primarily, as you mentioned, in the southeastern United States, where your team has a lot of market knowledge and influential relationships. Can you tell us any more about your competitive advantages in these markets?
Well, yeah, I mean, Bill and I grew up in Richmond, Virginia. Our families have been there for many, many years, hundreds of years. We both went to SEC schools, so we have classmates in our market area. Bill has ex-partners in our market area from his years in business in the commercial real estate space. So we call on that on-the-ground intelligence for help on a daily basis. And they show us opportunities that they know we like to buy, that fit our model.
Give us an overview of your portfolio now and what that portfolio will look like in the next 2 to 3 years.
So our intention is to have a diversified portfolio. The current portfolio has 2 retail properties and 1 limited service hotel. On deck, we have a flex industrial property, another retail property, and a limited service hotel. We are going to continue to source the properties I mentioned earlier. We plan to be $100 million, like I said, by the end of the year in assets under management, and $300 to $500 million in the next 3 to 5 years in assets under management.
I'll also note back to the Aegis report, again, that gives your stock a buy rating. I noticed one of the points that the analyst made is that you're actually trading 27% below your net asset value per share.
Correct.
Which is, I guess, one reason he gives you a buy rating. To wrap up today, what's the main takeaway for investors?
It's a great buy here, in my opinion. We feel like using our strategy going forward will continue to create the cash flow we need. I think we have a great opportunity in the Southeast. It's a very thriving market. We're finding properties in the secondary and tertiary markets that have higher yields, and it'll help make us successful in the future.
It's a great story. Tim, thanks for being with us
Hey,
today.
thanks for having me. Appreciate it.
Now, to get more information about Medalist Diversified REIT, visit MDRRinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. Now, it's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Now, let's go to our second company featured today, CTD Holdings. Their stock symbol is CTDH on the OTCQB.
Scott, thanks for being with us today.
Pleasure, Dave. Thanks for having me.
Now, your company is currently enrolling for phase 1 and phase 1/2 trials for Niemann-Pick disease, which is a rare genetic disease. Tell us about the disease, current treatment options, and the potential for the treatment you're developing.
Sure, Dave. So you're correct. We're enrolling in the United States in a phase 1, and we're enrolling in Europe in a phase 1/2 clinical trial. We're about to complete the enrollment of those trials. Niemann-Pick type C is an overexpression of cholesterol in cells. It affects every cell in the body, so that when a person is diagnosed with this disease, this cholesterol, as you might imagine, can do considerable damage to organs as well as to the brain in the body. Current treatments, there is nothing approved in the United States. There's a single drug approved in Europe called miglustat, which treats some of the neurological benefits of the disease. That drug is also used off-label in the United States by families here, but currently there is nothing approved in the United States at this point in time.
And as I understand it, about 1 in every 100,000 people are affected with this disease. It can happen at any stage in life, but typically very early, before 2 years old, correct?
That's correct. However, it's interesting with genetic testing and with the prevalence of so many folks paying attention to this disease currently, we're seeing later onset patients as well. People that had been diagnosed with psychiatric ailments, if you will, are later being diagnosed as Niemann-Pick patients in their 40s, 50s, and 60s, actually.
In this disease, does it affect every organ of the body? I know it does affect the liver, but does it affect other organs?
It's a good question, Dave. It actually affects every cell in the body. So yes, every organ, every mechanism, every cell in the body are affected by the disease.
Now, how do the patients in the U.S. cope now with the disease? Are there any treatment approaches available today that actually work?
You know, there's miglustat that's approved in Europe that was not approved in the United States for the treatment of the disease. So truly there is not. It's a completely unmet medical need in the United States. And frankly, in our view, in spite of miglustat being in the marketplace, miglustat has its own set of side effects that in many instances, the families, the caregivers, and the patients opt to not stay on miglustat because of those side effects.
And you have already received some data from your trial. So why don't you tell us about some of the data that you've reported?
So we've actually reported preliminary data showing very good results with respect to the fact that not only are we seeing cholesterol being lifted out of cells using our drug trapsol-cyclo, but we've also, through our testing, we have seen that our drug, although given intravenously, is getting through the blood-brain barrier and is in the brain, which gives us the benefit from the standpoint of our delivery through IV of treating the entire body, not just treating one segment of the body. And it's rather unique because the molecule, our cyclodextrin of trapsol-cyclo, is a rather large molecule, and you would theoretically not see that get through the blood-brain barrier.
You also have a compassionate study for the treatment of a single Alzheimer's patient. Talk to us about that program.
Sure. So a little over a year ago, we were approached by a very large family group that had looked at the profile of our company and looked at the profile and the safety profile of our drug. And they approached us with a prominent physician researcher, Dr. Diana Kerwin, with the theory and idea of setting up this single patient, late onset geriatric compassionate use IND. We wrote the protocol, submitted it to FDA, and it was approved. And I'll note, and the funding for this program was completely sourced by the family that sponsored the program. And the program has just completed its annual review, submitted an annual report to the FDA with the intent that the physician and the family wish to continue utilizing our drug for the treatment of the patient through the following year through an expanded access program. The result being is that we actually saw good results and positive results, such so that the company has already made a determination that we will be moving into a clinical trial program, and we're exploring that right now. And equally as important, our scientific advisory board has also looked at the data, and in fact, Dr. Flint Beal of Cornell, one of the prominent researchers in Alzheimer's and dementia, who has actually written a paper utilizing cyclodextrins in a mouse model, has joined our scientific advisory board, and we're in discussions with he and Cornell and other institutions about possible clinical trial sites for a clinical trial. And a question you might want to ask as a follow-on, Dave, from an asset standpoint as a company, we believe we have a strong asset in our clinical phase Niemann-Pick program, but we also believe we've got a clinical asset in Alzheimer's as well at this point.
Now, looking at the big picture, what's the essential value proposition? Why should investors take an interest today?
Well, CTD has a long history, first in Niemann-Pick type C, Dave, of having its drug used compassionately since, for over a decade. And we've got all of this data. In fact, all of that data that's real and has been published and is in somewhat in the public domain is the data that we utilize to put in front of regulators, not only in the United States with the FDA, but also in Europe, as well as in Israel, where we have 2 clinical trial sites. So, we believe we've got an efficacious treatment for Niemann-Pick type C. With the utilization of our drug and compound in this late onset geriatric patient for Alzheimer's, and seeing the positive nature of those results, we also feel that there's an expanded program here for us to expand out our platform with the building of those 2 assets. And frankly, based upon our current valuation and the utilization of these 2 assets and the possibility of other assets that we can develop around our program, we frankly feel we're extremely undervalued from a comparable basis.
I also want to add that you have a fantastic board of directors with the CEO of U.S. Pharmacia having put in $5 million. You have the past president of Colgate-Palmolive and other very important people that have invested heavily. I think you've invested overall, about $20 million so far in this technology?
So you're right, Dave. So we've got Patrick Ostronic from U.S. Pharmacia. We've got Marcus Seeger, who's our lead director. Marcus is the CEO of Pol Pharma, which is based in Warsaw, Poland, a very large biosimilar generics company, a deep bench in science and deep bench in drug development. We have Bill Shanahan, the former president of Colgate, as you've mentioned. And I'll say that, this board is very active. I speak to them almost on a weekly basis. In many instances, Marcus in particular, I speak to him almost on a bi-daily basis. I'll also mention our scientific advisory board, which is co-chaired by Rita Cowell. So it's a very prestigious group of individuals, but there are people that are very involved. And as you mentioned, every one of these outside directors has invested. And in fact, just prior to this last financing we did with the help of Think Equity, we have frankly self-funded the company through my family office and through the board and through friends and family, raising $20 million. And you're correct, U.S. Pharmacia is our largest investor with just under $5 million at this point.
And right, and you mentioned you recently closed a placement for more than $7 million. How far does that money take your development work?
So we raised $7.4 million through Think Equity, and I compliment those guys. They did what they said they would do. I'll also note that of the $7.4 million, $700,000+ again came from our board of directors as well. So we participated in the deal as well most recently. This capital will give us ample runway to complete the phase 1/2 trials and get clinical readout, which will be very important milestones for us, for the marketplace, and more importantly, Dave, for the patients.
To recap, Scott, what's the main takeaway for investors?
Well, I want to be clear, and we're capitalists, Dave. We're looking to make money, but our key focus is trying to help these patients and these families, not only with respect to NPC, which is a terrible, terrible, debilitating disease seen again prevalently in young people and in babies, but also in Alzheimer's. And we believe that we are at the precipice of being able to help them, this unmet medical need. So the opportunity is, one, helping these families and doing a very good thing for mankind, frankly. But at the end of the day, we think the addressable market for NPC alone is $500 million. So, with that, we believe that if we can obtain a portion of that market, we believe that the multiple that could be achieved on our company based upon our margin, which we're not going to disclose at this point in time, that our valuation proposition is such that our company is extremely undervalued. And I'll also note, Dave, that between now and the end of the year, we will be releasing some very interesting and positive news that we think will help the marketplace further understand the value proposition of our company.
Excellent. Scott, thank you so much for being with us today.
My pleasure, Dave. Thanks for having me, sir.
Now, to get more information about CTD Holdings, visit CTDH You'll see research reports, fact sheets, presentations, and the latest videos. It's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Now let's go to our last interview today. It's with Piedmont Lithium, stock symbol PLL on the NASDAQ.
We're here with Keith Phillips, President and CEO of Piedmont Lithium. Keith, thanks for being with us today.
Thank you very much for having me, Craig.
Keith, you've hit several milestones since you were last on the show, including your updated scoping study and mineral resource estimate. What does all this mean for investors going forward?
Well, the bottom line is, over the last year, we've made the project bigger and more valuable. So through a lot of drilling, we've expanded our resource from around 16 million tons to almost 28 million tons, an increase of about 66%. And that translates directly into a longer mine life, more cash flow, and a higher net present value. So the net present value of our project in our former study was $888 million. Our new NPV is over $1.4 billion. So the project's bigger and more valuable to shareholders like me and to others, and more valuable, we think, to potential strategic partners, including customers and potential strategic investors.
Keith, for our viewers who are unfamiliar with Piedmont, what's the essential value proposition? Why should investors take an interest in the company today?
Really two reasons. One, demand for lithium is exploding. Lithium is used in batteries for cars like Teslas and others. So demand is exploding, and we have the only American conventional lithium project that's being developed. There are no others. So most of the processing is based in China. The raw materials tend to come from South America and Australia. There's a series of other American projects, but ours is the only conventional technology based in North Carolina, the home of the lithium business, where Albemarle and Livent had their roots, and the business really started 50, 60 years ago. So we have a very large, low-cost American business, which we think has real strategic value. We do trade on NASDAQ, so we're one of only two U.S.-listed lithium development companies. Most are listed in other jurisdictions around the world. And we think the stock is cheap today. Lithium equities are trading down. We've been part of that as well. We think there's huge upside in our stock, and now's a very good time to look at it.
Keith, you've touched upon the drivers behind the growing lithium demand. Just how big is the market opportunity?
Sure. So last year, electric vehicles represented about 2% of the global car market. Annually, we sell about 100 million vehicles a year around the world. About 2 million last year were electric. Growth in electric vehicles has been about 60% a year since 2010. That's projected to continue by most observers. People think we'll get to 10% EV penetration by 2025. That's up 5 times from where we are today. Electric cars are also using bigger batteries with more lithium to have extended range, et cetera, and more power. So the demand fundamentals are fantastic. And really at 2025, when you get to 10% EV penetration, it's really a tipping point where it becomes increasingly clear that these cars will be less expensive to buy and operate. I bought a Tesla about 9 months ago. It's a fantastic car. I got a Model 3. It was about the same price to buy as an equivalent internal combustion car. It's far less expensive to operate and maintain, to fuel and maintain. And it's a very high-performing car. So I think the more people that are exposed to this opportunity, the more people will buy them. The more people who buy them, the more battery technology will improve, the cheaper the cost will get. And we'll soon be at a point where everyone's going to want to have an electric car.
Now, changing directions a bit, let's talk about the recent raise of approximately $14 million in July. How do you plan to deploy that capital? And will you need to do any additional capital raises over the next 12 to 18 months?
Well, I'll answer the second question first. We're very well capitalized. So that was $14 million US. We already had a few $1 million in the bank. So suffice to say, we have all the money to get well into the next 12 months or so toward a construction decision. Important priorities for us include getting to a feasibility study. So we're now at a scoping study level. Most of the work has been done to a pre-feasibility level, the engineering, the metallurgy, et cetera. We haven't yet done the infill drilling to declare reserves. Had we done that, we would have declared this a PFS. So we'll be doing that over the next several months. That's a several $1 million exercise to complete all that work. We think that'll be important confirmation of the quality of the resource and upgrade it to reserve. So pursuing a definitive feasibility study. We're spending a lot of time now with different strategic parties, whether we're talking about offtake parties for spodumene concentrate or lithium hydroxide. And also potential strategic investors. These range from battery manufacturers to cathode manufacturers who supply the battery material companies to OEMs, car companies who are interested in controlling their supply. So we have a lot of initiatives. We'll continue to build our land package, which we think will make the project even bigger and more valuable. And we'll just continue to advance the project.
Now, Keith, what major milestones can investors look forward to for the remainder of 2019?
I think the most important milestones the rest of this year, number one would be permitting. So we applied in December for our federal Rule 404 permit. This is a very important permit for us to receive. We think the process has gone very well. It's a very rigorous process, as it should be. The team has done a good job. We're well advanced in that. We hope to receive that permit this year. That's very critical, obviously, to our success and an important catalyst, we think, for investors. We're going to be doing more exploration drilling. So while we increased the resource by 66%, we think there's vast potential on the belt. So we'll have exploration results over the next several months as well, both soil samples on some of the non-core properties that we haven't drilled yet, and also some drill results, making the resource bigger at Central and at Core. And we may have news on the offtake front with customers. We're in contact with dozens, certainly a couple dozen, different parties around the world, again, from car companies to battery companies to cathode companies, who may have an interest in our material, and we look forward to advancing those conversations as well.
To recap, Keith, what's the main takeaway for investors? Why should they own your stock today?
I think we're at a great point for people who haven't looked at the space to look hard at lithium. Lithium equities traded up to very significant levels a year and a half or so ago. Lithium prices reached all-time highs about a year and a half ago. Prices have fallen meaningfully since then. They're still at relatively high levels compared to historic norms. That's really due to the change in the demand equation for lithium with electric vehicles booming. So you have an opportunity where the demand side of the equation is better understood. The supply that came on in 2018 is being digested now. There's very little new supply that's imminent. So the supply-demand tension, I think, will be very strong. And I think you'll see a run in lithium prices again. I think lithium equities will rebound very, very strongly. So this is an ideal time, we think, to be looking at the space.
It's a great story, Keith. Thanks for being on the show today.
Hey, Craig, great to be with you. Thank you.
Now, to get more information about Piedmont Lithium, visit PLLinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Now let's recap the 3 public companies you saw today. First, you met Medalist Diversified REIT, stock symbol MDRR on the NASDAQ, trading well below its estimated net asset value and with multiple properties getting added to its portfolio in the second half of 2019, it offers a compelling opportunity. Since IPOing in November of 2018, it has paid 3 quarterly dividends of 17.5 cents, and they intend to continue paying that rate in the quarters ahead, providing a great yield for investors that own it at the current prices. Visit MDRRinfo.com to learn more. Then you learned about CTD Holdings, stock symbol CTDH on the OTCQB. This small company has generated positive results from administering its drug to an Alzheimer's patient under a special FDA program. As it moves into clinical trials, investors' interest could begin to pick up. The company is also working on clinical trials for a rare genetic disease that has received the orphan drug designation from the FDA, which gives it fast-track approval potential. Visit CTDHinfo.com to learn more. And finally, you saw an interview with Piedmont Lithium, stock symbol PLL on the NASDAQ. They're developing the only conventional lithium project in the U.S., and with demand for lithium expected to soar as more and more electrical vehicles hit the market, PLL is in a great position to grow shareholder value in the quarters ahead. Learn more at PLLinfo.com. Again, if you have any questions about today's featured companies, call us at 1-800-RedChip or email us at info@redchip.com. I'm John Cunningham. Thanks for being with me today. And remember, while small caps can provide significant gains, you must be prepared for the downside. Many of the companies featured on this show are RedChip client companies, so please always read our disclosures at redchip.com. Thank you for being with us today.